So fundamental analysis is just a form of analyzing a stock, right, and its behavior. It's used for evaluating the intrinsic value of a stock or security, which helps us to determine the fair market value of the stock. Fundamental analysis uses criteria such as microeconomic factors as well as macroeconomic factors, including but not limited to things like the overall state of the economy, revenues, earnings per share, projected growth, consumer behavior, supply and demand, and other financial data, etc. Right? So it's just a way of analyzing what's going on with the stock and using that type of analysis to come to some sort of conclusion on if the stock is at fair value or not, right? If you think that it's a fair value, then you buy it, right? Based off of your fundamental analysis. Technical analysis is like a visual form of analysis, right? It's the analysis of price patterns, volume, and trends done so in a visual manner. Technical analysis takes into account all news, earnings, buying, selling, emotions, fundamental aspects, and forms it into a clear, concise picture that can be analyzed in the form of a chart. Technical analysis is used by traders to identify opportunities and forecast future price movements. It is our analysis that helps us profit from these movements regardless of whether price is advancing or declining. So that means as traders, we can actually buy here low and then sell when it gets higher. And we can also capitalize on the decline by borrowing shares and selling them and then buying them back lower. And we'll talk more about that later too. Technical analysis is important to day traders as it can help identify desirable points of entry and exit into a stock, which can help to minimize risk and maximize profits. All right, so technical analysis is very important because when stocks come to this level, right, just like fundamental analysis, they have an idea of a price in mind that is a fair value. Well, based on our technical analysis, we can form the same type of opinion. And when a price reaches that level, a desired entry is formed and we can enter into that stock. Which form of analysis do we use? Fundamental analysis is not used for day trading. It is primarily used for long-term investing. Due to major price swings and the fast nature of day trading, we will rely on technical analysis to be our guide. We will concentrate on learning and mastering the art of technical analysis to provide us with an understanding of where to enter, exit, and how to manage our trades to turn a profit consistently. Since humans tend to share similar feelings and reactions caused by emotions, we can use stock charts in order to take advantage of this. Stock charts will show the patterns price makes, which are often caused by people buying and selling at the same places, which forms patterns. In this course, you will learn what are known as patterns or setups that commonly recur every day. You will learn how to identify these patterns using stock charts and use them to your advantage in order to profit from them. The conclusion. So fundamental analysis is used primarily for long-term investing into stocks. Technical analysis is used primarily by day traders, swing traders, and occasionally long-term investors. Some long-term investors do use technical analysis. Paul Tudor Jones is known for using technical analysis, and he is a long-term investor. We will use technical analysis as a visual form of analysis in order to identify recurring patterns and setups. The reason these setups and patterns work is because they are based on human behavior, emotions, and known locations and prices that will offer the most reward with less risk. Trading patterns that offer low risk to high reward opportunities is a necessity in order to trade profitably.